Weren't we looking at dishonored checks? I talked about that last time on the form that we could run into an issue of having a check that's been dishonored. That means it's no longer, that was not valid. Someone wrote a check that they did not have funds to cover. That means there was not enough money in their bank account to cover the check that they wrote to you. And so you have to deal with the fact that this check is going to bounce and there's going to be fees connected to it to you, and then how you're going to pass on the fees and how you're going to record the transaction. We're also going to learn how to journalize electronic funds transfer. That's where you move money from one account to another account. And then journalize a debit card transaction. So there's not a check involved with a debit card, but it's going to behave just like a check would. A check that is dishonored is one that's been refused to pay by the bank. The dishonored check is for insufficient funds is non-sufficient funds check, NSF check. So you'll write in the other spot dishonored check. And then you're going to write the amount of the check plus any fees that may have been involved. And then that's going to subtract from your total to get to the next step. And so to journalize a dishonored check, we received notice from the bank of a dishonored check from Valley Landscaping for $185 plus a $40 fee, for a total of $225. This goes with memo 52. So accounts received, we need to create an accounts receivable for Valley Landscaping that they owe us $225, because we need to recoup all the cost of this transaction, including the fee. Cash is going to go down that same amount. So we're going to write the date, write the account, write the account title for the debit account, which in this case is accounts receivable Valley Landscaping. And then our cash is going to be our credit, or the source document number. So if we're going to do electronic funds transfer, that's transferring without use of checks and currency from one place to another. On June 5th, we paid cash on an account to Euroneck Enterprises for $380 using an EFT. Our accounts payable to them is going to go down, and our cash is going to go down. Like I said, this is behaving exactly like you would if it was a check. Nothing changed, except for the source for this information is going to come from a memo versus a check. Just journalizing a debit card transaction, deducts from the amount from the purchase from the checking account, just like a debit card is without using a check, is using a debit card. So again, this is going to be used just like a check would. We purchased supplies using a debit card, so supplies went up, cash went down. So cash was our credit column and supplies was our debit column. We're going to write the date in the date column. Supplies is our debit amount and for 75, and the next line we have our credit account for cash for 75, and the source document is the memo. Another thing that could be used for evidence on this is going to be a receipt that you held on to from the transaction. The 6th reason a bank may dishonor a check: the check may appear altered. The signature on the check does not match the signature on the signature card, which is a digital card now, but they used to actually have signature cards to confirm your signature with. The amount written in the figures and the words do not agree. The check is post-dated. That means you're depositing it and it's dated 3 days after you deposited. That's a post-dated check. It's not dated for the date that it is. The person who wrote the check has stopped payment on it, and the person that wrote the check has insufficient funds to pay for the check. So which account is the credit account for electronic funds transfer when used to pay cash on an account? Identify which one is the credit account. Cash was the correct answer. Which account is credited when a debit card is used to purchase supplies? Cash is the correct answer. Let's go ahead and look at doing a few of these transactions on the on your own problem. So again, I unpin it, move it to the side so I have access to it. We're in August, so AUG dot 18. We received notice from a bank of a dishonored check from Christine Everson for $126 plus a $25 fee for a total of $151. One thing I forgot to make a note of, on this book, they are not including any extra fees that you are putting into the account. And so you typically as a business person would have a fee for an insufficient funds check as well that would go in with this. So we need to take and figure out what are our two accounts. Well, we're lowering our cash. We're lowering our cash because we did not, that money was no longer deposited. So that's going to become our credit. Our debit is going to be our accounts receivable, Christine Everson. Oops. And the amount was the 126 plus 25, or 151. Our credit account was cash, and it was the same amount. Our document number was memo 312. That's where we have evidence for this transaction. On August 20th, we have paid cash on account to Shorts Enterprises for $270 using an EFT. And so Schwartz Enterprises is one of our liabilities. And so we're lowering the amount of the transaction for them. Cash is being lowered. Cash is therefore the credit. We're lowering our liability, therefore that is the debit. This is being, the amount that we are transferring is $270. And again, we said cash was the credit because we lowered our cash amount. And the memo 313 is the evidence for this. On the 21st, we purchased supplies for $62 using the debit card. And our evidence is memo 314. So cash has been used. It's lowered our cash amount, so cash is credit. Supplies has increased as we added value to our supplies. And our evidence is the memo 314. It was for $62. Save and continue. Now you're going to do one on your own plus the application problem.